Martin, hi, how are you? Desi is here. Kirill, good morning. Bill, Lalit, Michael, Steve, welcome. All right, give me a second. Let me try to invite Discord guys. Alone, welcome. I'm gonna try to load trade here. All right, full house. All right, trade here is loaded. That's good. And then last but not least is this. Give me 1 second, almost ready. All right, then let's start. Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon. And today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If you're on the broadcast on YouTube, Discord, go to webinar, welcome. Type in first if this is your first time here, but this is my brief bio. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own stance level for general education information purposes only. Right, trading psychology is important. Again, one of the difference between Yellow Tunnel and Tradespoon services, maybe with some other services, is that we provide both technology and modeling, right, using latest advances in artificial intelligence to provide signals in the market, short-term, medium-term, long-term signals. But we also, I trade them in a live trading room environment. And you can see my orders and positions on the website. So in terms of trading psychology, very important to have a trading plan. I encourage you to keep a journal and document all your trades. And before you place a trade, have a checklist of your trading goals. Some of the items in my checklist is cash. The most important is risk management. So 30% portfolio in cash in case this pullback is deeper or longer than anticipated. You want to have cash so you can, if you believe in the long-term uptrend, the medium-term and long-term uptrend is intact, you do want to be able to buy, the market does pull back further. Portfolio drawdown, looking at number of positions times position size, right? That's your portfolio drawdown. So I encourage you, if you start trading where you need to only have 4 positions at a time and maximum loss of 2.5% of portfolio per position. So number of positions, these are some of the other items on my list that I encourage you to consider when you build your trading plan. But 4 positions straightforward, 2.5% account value, right? And 2 to 3 days kind of trend change. We had a pretty sharp pullback in semiconductors yesterday in some of the leading stocks like General Electric and Eli Lilly. So the question is, it a new trend, downtrend? Probably not, right? You need more data. If you're doing short term, you want 2 to 3 days. If you want medium term, you want at least 2 to 3 weeks for lower lows and lower highs. So for now, you have to just wait and see what happens. We'll talk about that shortly. But for positions, straightforward, 2.5% account value per position. So let's take a look at our model and see how you determine 2.5%. So looking at the stock forecast toolbox to find support and resistance for the current session, we have this neural network model called stock forecast toolbox, where basically you can analyze any stock or ETF. And it will tell you that we're still short-term positive bias in the market. Key support for today, 550, 557. We did have a sharp pullback. Right now, model still shows positive uptrend. Right, potentially we could get to 543, 544 on spiders. But that's where the model is predicting. So for the current section, 550, let's just take a look at spiders. So we had a pretty sharp pullback yesterday, down 1.5%. Today, spiders are at 558. So model sees 550. This is the breakout of June highs. Right, so here, breakout of June highs is your key support. Right, so 556 is the current support. And then if we break through this level, then 550. So for day trading, I would use 550 as your support. Pretty strong support, goes back to June highs. It would be almost 30 days. The second one is the gap, right? The June CPI data, we talked about that for a while. So 540. Let's actually do this so we have it. So let's draw these lines so we have them. Short-term 556, but for today it's 550. Right? So this is the main support. This is the CPI data from back in June when market broke out, made June highs, and then if that level doesn't hold 550, the next level will be 50-day moving average and the gap, right? The June gap. Right? So 550 and then 540 are your two main support level, right? If you're day trading, I would use 550. Maybe if you're doing weekly trading, monthly, medium term, short term trading, consider maybe 3% pullback as healthy, and anything below, below 540, maybe reversal of the trend. So 550 would be about, well, now market is up, so that would be 8 points, maybe 1.5% as your maximum exposure. And so here it would be roughly 8 points if you want to continue being long. Let's put easy numbers to calculate 10. Right, so I would use right below 550, and if you're doing medium term, maybe right before 540, which would be 18 or 20 points. Right, so VIX picked up. I think partial steep pullback. We've had that usually during expiration. Right, Nvidia pulled back 6%. Also, I believe during April or May expiration. Let's see when was the last time it did. It was right up on the expiration week as well, because of the position, right? We talked about position. So I think we had this sharp pullback in March. Yeah, I think it's always kind of the same level, right? March, not this way. So April, yeah, so Friday the 19th, April 19th. Yeah, so this is the third Friday in April where we had a sharp pullback during option expiration week. Bulls stepped in the next week, right, and the rally continued. We may or may not have the same. We'll see, but Nvidia is sitting at the 50-day moving average. It's bouncing back. The market opened, but on Taiwan Semiconductor earnings. I think Taiwan Semiconductor announced earnings, and they were better than expected. So kind of reverses the trade from yesterday on ASML. But that would be the calculations for the support and resistance levels and spiders. Right, so at 540, 20 points divided by 250, maybe even by 10 shares of spiders. If you're doing day trading, $250 divided by 5. If you're doing day trading, $25,000, less than 1% stop loss. So I would take 10 points divided by 250, so 25 shares. So 25 shares, 50 shares here. So 20, if it's 10 points divided by 225 shares here, and if it's 20 points, then it's 10 shares. So that's how I would use target gain and stop loss to determine 2.5%. In terms of news, right, I think one of the main news, obviously earnings, but then options expiration, right? VIX jumped to 14, still pretty low, but it did jump to 14 today, yesterday, sorry. 10-year yield is stable, still below 4.3, but oversold. We had initial claims today that came in hotter than expected, close to 250,000 shares, 240 something, 43, 44. Let's see market watch. I don't know if they reported it, but initial claims are ticking up, right? Unemployment rate slowly ticking up. I think it was 240. I mean, one month is not enough to change the trend, but if it continues to be close to 250,000, that could be a sign that there is a more rapid deceleration in the employment market. We do have leading indicators on Thursday. Partially, the pullback is due to weekly expiration, right? The VIX expiring yesterday, Apex, and then Friday expiration, right? So we have these sharp pullbacks and very large volume. So pretty bearish price pattern, right? SMH is the same. It wasn't just ASML or NVIDIA; it's most of the semiconductors got a sharp pullback on above average volume, right? And last time when it happened in March, we did bounce back, but we consolidated and actually continued to pull back. So something similar could happen now again, especially as we approach in August and September, which is usually bearish for the market. But for now, it's just a rotation. Value stocks yesterday actually posted a green candlestick, so value stocks continue to outperform and trending higher. So we still have rotation into stocks like JP Morgan, right? We talked about JP Morgan yesterday, and we talked about ExxonMobil. Any questions? In terms of yield, support resistance levels, Bitcoin got traded above 60,000, so that's bullish. It's fighting for the 50-day moving average. Looks like losing momentum, but nonetheless, it's positive, probably meaning that this is close. 200-day moving average was probably close to the bottom, that 52,000, 55,000 print. Crude oil continues to pull back, consolidating below this uptrend line. And let's see. So the elections, right? Another reasons that both Biden and Trump said they're going to put additional tariffs on China. That's contributing also to the pullback. Yesterday, in the past couple of days, you see China kind of steep pullback to the support line. Let's see what else is interesting. Small caps continue to outperform the market. Pullback, but still, I think this breakout is confirmed. So I would be a buyer if it does drop closer to 12. So those are general observations. Let's look at the earnings. Let's see if there's any questions. That's the TLT and 10-year yield, right? So 10-year yield, I think it's still patterns of lower lows and lower highs, right? So these patterns of lower lows, lower highs continue. We did dip below this line briefly. I think next level is around 4%, would be March level. There are two events that are coming. One is Powell's decision in terms of interest rate that everybody is anticipating, the probability of September the first time the lower cut rates is on the table. Today, ECB Europe came out with a decision to keep interest rates intact, but they did open the table for further cuts this year. So for now, I don't see a lot of movement in interest rates due to ECB decision, but end of the month, last Wednesday of the month, we have decision from FOMC, Powell will speak. That is one event, and inflation data, right? But inflation data, we have to wait for the next, for August. So I think right now we trade in the range, right? Somewhere between 4% and maybe 4.4, 4.5, right? But still pattern of lower highs and lower lows. That means that the pattern of higher highs, higher lows for TLT. Right now, TLT is facing overhead resistance at 95, but I still think it's a pattern of higher highs and higher lows. And JP Morgan also confirms to this trade where JP Morgan broke out after the earnings and continues to trade higher. Any questions? Thank you, Desi. Faust. Good morning. John, good morning. Raymond, Fred, good morning. To reward higher than what you're risking. I do not think it is a simple dependent time. Do you have an opinion on a straight question? Desi, very good question, right? It goes back to your style of trading. Right? So the question was probability of success versus return on capital. If you structure your trade where you risk $1, but you're trying to make, let's say, $3, is probability of that is a lot smaller. The probability of that is a lot smaller, right? That if you do, let's say, 1-to-1 consistently, right? But return on capital is higher, right? If you risk $1 to make $3, you're looking for 200% return. These are outliers; they don't happen very often. But return on capital is great. So when you trade options, usually you want to look at: do you want to be long volatility or do you want to be short volatility? Right? So yesterday I actually did 2 trades. Let's look at them. United Airlines, right, announced earnings. It's up 2.5%. No, actually, it was as high as 50. Right. Kind of reverses, and then we had Alcoa. So in both cases, there was a pretty large call skew, right? So let's see if we can still see it. So now looking at dealer exposure for United Airlines. Right, so very large position at 50, right? And that for July expiration in August. Expiration. So it means that in terms of gamma exposure, dealers are short gamma, and when dealers are short gamma, they might have to force the stock to, as it approaches 50, right? And that's the highest strike right now. To basically, it could be a repellent, or it could be attract the stock and pull the stock to over 50. You can actually see on United Airlines, it did pull to exactly 50, right? 49.67, and now dealers are forced to, in this example, it's to act as a repellent, right? Because in theory, dealers are forced to sell the stock, to buy the stock. So they were buying stock all the way to 50, and now they are the trade is being reversed, right? So in this example, I actually did the butterfly, right? It's using the strike at 50. It's the middle. Whether it's going to stay at this level or not, we'll see. But for now, it's kind of been rejected, right? Because dealers are short the gamma and they're forced to sell the stock. So this is an example of United Airlines. And this is where you have to make a decision. So I don't think there's a simple answer. I always look for high probability success, or I always look high return on capital. Based on market conditions, you want to look, right, based on how people are positioned and how dealers are positioned. So for options trading, you basically want to be either long or short the volatility. On the setups like United Airlines, when you go into the earnings and you see a large positioning at 50 and 55, right, where people long calls, you might want to be long volatility, right? You can buy call spread, you can buy butterfly or buy a call, and that's where you're looking for your risk a dollar to make $2. But if you look at spiders, you might want to take a different approach and sell volatility, right? So very popular trade is you sell put spreads, out of the money put spreads, or you sell out of the money call spreads, right? Or you buy deep in the money call spread, and you're looking for time decay, right? You're looking for time decay basically. So spiders is different, right? There's much higher put skew, right? There's little demand for calls, very high demand for puts, and you can see volatility skew is very high. Vol skew is very high, meaning the dealers are long gamma, right? The dealers are go long gamma into expiration, and then next week, August 16th, right? So, and support, in terms of where we can find support, right? You can see 550, that's July 19th. So between now and tomorrow, 550 sounds like a good support, but these options will expire tomorrow, right? They'll be gone. We have next week, 26th. So next Friday is July 26th. We do have support at 550, not a lot, but we do. Oh no, sorry, August 6th. Yeah, July 26th. So July 26th, we do have a support around 550. Right, that's the next support. So I think 550 at this point is well positioned. So I would watch the spiders and see if the 550 level will or will not hold. Right, but that's my thoughts on risk versus reward on option trades. Right, going back to game theory, right, it just depends on market condition. Right, whether you want to be, look for high probability of success and, low return on capital, or low return on capital, high probability of success. Right, so then this is where the game theory comes in. Right, and game theory basically says it doesn't make sense to always be long or always be short, right? Symmetric and asymmetrical returns, right? Asymmetrical returns when you're long volatility, symmetrical is when you're short. This is bullish, bearish, right? So sometimes you want to always be bearish. So you don't want, the idea is not to always be bearish or bullish, right? Sometimes you want to be kind of combination of based on market conditions. All right, Desi, thank you for that question. Bob, traveling by checking in. Thank you. Wake up. Thank you, Kevin. Something. Okay, Kevin, thank you for your comments. All right, let's look at the market again. How's United Airlines? It's still. So we have kind of a big rally and then quick sharp pullback. Let's see that rally resumes. Johnson & Johnson was a similar setup, right? It actually got close to 160, right? 158 level on Johnson & Johnson. Another earnings trade. And you have a very large position at 160. So similar setup, but this is, notice mostly is a put skew. Still put skew, right? Where dealers are, gamma exposure dealers are long the gamma. In case of United Airlines, they were short the gamma, right? So above x-axis, below. So when they are long the gamma, dealers are forced to sell when it gets close to 160. So we did get to 150, almost 158. Dealers closed some of the position. Now we're fighting for this 158, maybe 160 level. So I wouldn't be surprised Johnson & Johnson could get close to 160 by Friday expiration. All right. What are some of the others' earnings? Let's see. Let's look at earnings. Let's just review them again. So we talked about, I mean, so far, United Airlines, no movement. So United Airlines did get to 50, but pulled back. Looks like holding 200-day moving average. Alcoa, aluminum maker, steep sell-off into the earnings, and for now, still no reaction. So aluminum prices are still down. So that's a good disinflationary force. Let's see. We're talking about Taiwan Semiconductor, which is important. So actually, Taiwan Semiconductor is turning negative. So that's interesting. So that's the earnings reaction to the earnings. How does the rest of the semiconductor? Yeah, so Apple is turning negative, Amazon. So it looks like rally is fading in the semiconductors and PQQ semiconductors almost flat. Taiwan semiconductors are losing steam. It was up at as high as 178. So despite strong earnings, people are selling semiconductors, partly due to seasonality, partly due to the expiration. So let's see how far that will continue. We have Netflix today after the close, Blackstone Group, BX. Let's see how the money managers, banks are doing. Wealth management, BX, API, IPO market is rebounding. BX continues to break out after the earnings, similar to Morgan Stanley and Goldman Sachs. Let's see, Abbott. Yes, KeyCorp. Domino's Pizza, I know is down. Talked about Diamond Semiconductor. So let's see how it's Abbott doing. Yeah, so Abbott continues to be weak, not bouncing back after the earnings, not strong enough. Let's see small caps like KeyCorp. Continues to outperform, pull back after the earnings, but you do have a breakout. So KeyCorp continues to be strong. And yes, so Taiwan, I know DHI, I think, also pulled back after the earnings. Home builders. Look at home builders. Actually turning positive. DHI after the earnings turning positive. Wow, it's a pretty hard move, despite I think lower guidance. So DHI had a strong rebound, up 10%. So looks like home builders are stabilizing. I think these are the most notable earnings from today, and PPG materials. Let's see how materials are close. Similar to Alcoa reaction. Yeah, similar to Alcoa reaction. Downtrend, disinflation, still below 200-day moving average. So pretty bearish price pattern didn't move the market. All right. United Airlines, 48. Let's see. Any questions? Look at United Airlines. 15 minutes. Looks like it's rebounding. Let's second. Cherry Blossom is still there. Second. All right. Let's see if United Airlines can gravitate toward the 50 level again. JP Morgan pulled back today. ExxonMobil is up. Ford continues to grind higher. I think I'm out of Ford. Let's see. So Ford spiked to the upside. So let's review some of these positions that I put on recently. So yeah, I'm out of Ford. That was a good trade. Ford continues to grind higher. And I trimmed ExxonMobil. So took, I think, 2% gain in Ford. Let's see. Ford was last 30 days. It was from last week trade. Yeah, 1438, so 1465, so about even more. This would be 27 cents, 2%, yeah, 22%. So 2% profit on Ford. And then ExxonMobil was the trade from yesterday. So I was able to capture 1% in ExxonMobil, looking to exit 119.08, and then took a close half a position on JP Morgan. I bought it at 214.49, closed at 216.90, and next I'm looking to exit at 218.20. So those are the trades from the last 7 days, from the past couple of days, from yesterday and today. So I'm out of Ford, trimmed half of the position in ExxonMobil, half of the position in JP Morgan. And then silver, we had a pretty sharp pullback in silver yesterday. Let's look at silver. It's a pretty sharp pullback. You know, all interest-sensitive sectors. I still would be a buyer on silver pullback. We'll see if this 50-day moving average will hold, because it pierced through the gap briefly. So it does open the door to potentially reach 27 levels. So maybe 27, I would be a buyer. We have this support. on the breakout level here. Lower. But around 27, I would be a buyer. On silver, so I added the silver and still long IWM. IWM also pulled back yesterday towards the end of the session, but still in strong uptrend. Any questions? Martin, Desi, Kirill, Bill, Wally, Files, John, Ryan, Raymond, Bob. Any questions? All right, it's 8:55. We do have Netflix. The next notable earnings is Netflix. After the market close, we have Netflix. So let's go through the rest of the positions and just, all right. So FXI, we talked about FXI. Probably if it drops below 26, I would get out, especially with this new ratchet of the tariffs that could be kind of a headwind for China for, short term and medium term. General Electric also pulled back yesterday. This is August position, so I do have, time is not on my side, and it is announcing earnings. We had a sharp pullback yesterday, kind of retrace into July lows. We do have expiration in 5 days. Well, not expiration, but earnings in 5 days. So my exit strategy: either I'm going to lose, either I'm down 50% on that position, or just close maybe before the earnings. But 155, 160, we're trading at 158 right now. So, but because of the earnings, options will probably not move a lot up until the earnings day. Google is September position. I have time. All the AI stock had a sharp pullback yesterday. Google continues to deteriorate. Same exit strategy. If you see it drop 50% of your debit spread, I would exit the position. Earnings is also in 5 days. So General Electric and Google will announce earnings next week. For now, it's oversold. We do see, I think, market is slightly positive, but I think most of the gains, semiconductors are actually pushing back up. They've retested the lows. Let's see what's going on with Taiwan Semiconductor. Because that's been on the news. A lot of people trade this name. So far, poor reaction, right? Better than expected earnings. Poor reaction, so it doesn't look like earnings matter now, right? A lot of people just going to be stuck in this rotation trade. So for now, up 2%, that's positive. Okay, so that's Google. I'm bullish on IWM. Started IWM position, going to trade around this position. I have a call spread and ETF itself. We talked about JP Morgan. I trimmed half the position. I think it was the yield steepening, right? Steepening of the yield curve and lower interest rates. 2-year dropping, 30-year staying higher. This is good for JP Morgan. We've seen a pretty sharp. If you look at the 2-year drop, right, from 5 to 4.44, a lot steeper drop than 30-year from 480 to 440, right? So this steepening of the yield curve, or 30-year drop less than 2-year, that's bullish for JP Morgan. LA Lilly, similar to silver, all the winners, people were taking off profit during the OPEX expiration yesterday. It continues to drop. We do have earnings coming up. I mean, this is a pretty bearish price pattern. We do have a support here, 50-day moving average, I would say is your support. I mean, if you're down 2.5%, I would exit the position, right? Because you really don't know where it's gonna stop, right? It could be 50-day moving average, it could be further. But if you're not, then I would wait and see if it can find support around 50-day moving average. In terms of positioning, let's look at Eli Lilly. If there's any support or resistance levels. I assume it's around 50-day moving average, but let's confirm. All right, let's look at LA Lilly. Where can you find support? So it's trading at 888. Not a lot of put buying, a lot more aggressive call buying, obviously. So you do have dealers short the gamma, which is not good. When you have these pullbacks, I mean, you have 820, so it could drop to 820, but the first line of support, not a lot of positions at 870, which is, I think, 50-day moving average. Yeah. So 870 is about 50-day moving average. So I would watch 50-day moving average. And the idea is either if you're down less than 2.5%, maybe that's the time to buy. If you still think that short-term, long-term, the trend is intact. But if you are down more than 2.5%, then I would consider exiting position. So that's LA Lilly. We talked about silver. We talked about ExxonMobil. And I'm out of Ford. Any questions on positioning? VTV, yeah. So value stocks they continue to outperform today. They're breaking out. You can see, yeah, VTV continues to grind higher. So VTV is breaking out. You still have kind of this rotation trade, right, where people are, but the value stocks continue to outperform QQQ, and small caps continue to outperform value. So that trade is intact. It's been happening, it's been like this for at least a couple of weeks. So maybe this time it will be different, right? We've talked about this for the past couple of years, but it seems like this is, the inflation is going down, and Fed is probably going to lower interest rate. The soft landing scenario probability is increasing. People are rotating into the value stocks. With decent options. Yeah, I mean, Dow Jones should have decent value, decent volume. I think DIA, it's similar chart pattern, right? I mean, diverges sometimes, but I would say DIA is probably the most liquid. 3 million average volume, 3 million right now. 35 billion on assets under management. So, and that's why one of the reasons I got out of this trade, because of this rotation into the value stock. So you can see the breakout is confirmed. Got option stock chart experience earnings. Pfizer, thank you, Ian, for sharing. We'll see, yeah, but looks like Pfizer is finally catching a bit and into the earnings and broke out of this year-to-date high. Yeah, I think it's year-to-date high finally. This was our robo-investor pick for quite some time, but it looks like, yeah, Pfizer is catching a bit. And it does look strong. I agree. Thank you for sharing, but it all depends on earnings, which announces Friday morning, I think. So Netflix, I think, is after hours today. AXP could be tomorrow. So let's look at AXP. Let's look at Netflix. Netflix is after the close today. Probably the most notable earning of today is Netflix. I assume it's again, dealers are short the gamma because everybody's buying calls. I haven't checked, but let's review that. So this is going back to this trade. I mean, so far, Johnson Johnson worked out well, going long volatility. Netflix, we'll see.
Did you get it, Jen? Okay.
But yeah, you can see kind of a similar setup where there is a large expectation that there will be a large move. And dealers are short again in August contracts. Right? 750, 800. And here you have 565. So implying, this is short, but implying that we might have a move. I mean, the first is 700, so that would be maybe a 10% move, which Netflix usually moves. 750 about $100. Right? So that's closer to 15-20%. So 750 on the upside, that's 100. This is what, 550? 580. 580 and 750. If you look at the estimated move analysis, let's look at the bar chart. Expected move. Let's look at trade here. So about $70-80 is the expected move based on bar chart calculation and based on micro calculation, the implied volatility. $652 is this $652. $652, so 26 plus 20, 30 plus 30, 60, 60 plus 50, 110. So 110, so probably matches, right? So $70, that's one standard deviation. Two standard deviation, 110. Divided by 2 is about 55, 60. So 55, 60, 70 probably occurs 70% of the time. Implied volatility is very high, 205. Based on the calculations here, 60 plus 20, 80. So 100. So yeah, I think the spike at 100, this is one scenario, can move to 750. And the other scenario, it's drops 100 points to 565. So I would use butterflies. Right? I would use butterfly because of the short gamma. So it's maybe think about putting that trade on Netflix. Last season, earnings season, Netflix did move significantly. Let's see if I actually have. I don't think I have Netflix and earnings power trading. So let me see if I can add Netflix. So this is an example where I'm looking for asymmetrical return. Let's look at
yeah. Only so high. Next time he comes into town, he shouldn't stop up. Yeah.
All right.
He's gonna be he's coming with the hat. I don't know if it's coming. I don't remember that. I did that with money block. Money block. Yeah, exactly. Margin Jordan technology guy.
Yeah, so let's go over the Netflix.
Yeah. He's got a team of 3 other guys as well, so 4 of them might be board.
Yeah. That's awesome.
Yeah.
Second. Okay. So just trying to make sure I got this set up correctly. Give me a second on Netflix. Okay, so I do have Netflix. Let's put on this trade. Butterfly. Let's see what the butterflies are. Look at.
Yeah, and if you want them, you can also
All right, so 750 strike. 650, 750. See how much did it move last time. Yes, it moved about 10% last time. So last time. 650. So 730, 750, 770 is trading about 60, 70 cents. 730, 750. 730 would be $80 move, which is what bar chart estimates. Okay, so let's try that. Buy the open one. The volume is not a lot. That's the only problem. Less than a million shares trade right now. Bid and ask is 10, 15 cents apart. Let's see. That's 0.70. 70. So let's see. 80 cents. Yeah, it's not the most liquid name, so it's going to be hard to get it fill. So I'll put the trade and then we'll see if I can get filled. Maybe change it at the closing. But for now, I'll leave it like that. So let's do butterfly. 20 strike difference. So it's about 3% the width of the strikes. I'm going to share screen. Just give me 1 second. I want to make sure that I put the trade correctly. So let's see if I open interest at 60. 580. This is 60, about 80 cents. Like the open. 80 cents. See if this trade gets filled. Okay. Okay. So the middle strike on the calls, I selected 750. Right? So that's the two standard. That's the $100 move based on the implied volatility. So if I do the calculations here, at the money, so 27, roughly 30 plus 30 is 60, 60 plus here 20, 80, 80 plus 25, 105. So that would be two standard deviation move under normal circumstances. I think probability of two standard deviation move is higher. You can see it in the strike price, right? The highest open interest is 750, right? $100 move. $750 move, that's, probably one standard deviation. But, if there's any positive or negative surprise, you could get to 750. So that's the reason why I selected the short strike. 750. So 100 points to the upside, to the downside. 100 points to the downside, that's 555. So the idea is that we do have well positioning. This is, I think, 565, right? 565. So these levels are pretty well positioned into tomorrow. And in theory, if there's a positive surprise, it could get to 750, or if it's negative, to 650. Any questions on the butterfly? For now, I put in 80 cents on each side, and I don't think they got filled yet. So we'll wait, see if maybe one gets filled, and then make a decision. Any questions on Netflix butterflies? AXP, so let's look at AXP. Similar AXP, people have, dealers are short the gamma, both calls and puts, right? You have people with long calls, short puts. So 230, 23, about 10% move in AXP to the downside, to the upside. Largest position is 280. So 10% to the upside, 10% to the downside, based on the open interest, and based on the expected move. Let's see, is it probably 7% closer? Let's see what. Yeah, so one standard deviation would be 5%, two standard deviation would be 30% of the time it will move within 6%, but 5% of the time, 3% of the time it moves 10%. And I think based on positioning right now, there is a higher probability that it can move close 10%. Let's see what it did last time during earnings. So pretty large move, right? So about 6%. It's about 6%. So I would do also butterfly. Right? I would do butterfly on AXP as well. And so far, Symphony Financial didn't really move that much. Right? It was kind of flat. Still trading higher. And this is not American Express, but maybe works. And let's Discover Financial. How much did it move? Discover Financial actually breaking out after earnings. After earnings is breaking out. It's about 3%. So we'll see. Do you have any thoughts on CMG? CMG has been a long signal several times in the past months. It has sold off precipitously to 200-day moving average. Again, you usually want to wait for the bottom, right? I mean, it's been a strong stock. I mean, I know we want to buy it because it's, look for signs of bottoming process, right? And usually bottoming process, like Bitcoin, right? So Bitcoin, I think we are very close to the bottom. If not, we already reached the bottom, right? So Bitcoin, I think, the 50-day moving average could be denied, and it could drop to 56, but I don't think it's going to drop much lower than 200-day moving average. So this is a kind of a classical example of bottoming process. In CMG, the bottoming process hasn't started, right? Every day it's new lower lows and lower lows, lower highs. So I would not trade CMG yet. Maybe to this downside, but that would be my thought process on CMG. All right, you guys have been great. Thank you very much. We do have a closing bell at 2 p.m. Central. I hope you guys can make it on YouTube. Please click on the subscribe button. Thank you for participating. If you like the video, please share it with your friends. And I will see you at the closing bell. Thank you.